Hey everybody, how's it going today? I'm actually going to be talking about well health technologies today. And as you or some of you may know, it's been attacked by Grizzly Bear Research. What is Grizzly Bear Research? Well, I just found out today that Grizzly Bear Research is a short seller company. And they wrote a report directed towards well, and once the report came out in the morning times and all, the company was trading about 4 or 5% lower, and now since the market is closed, it's kind of trading break even. So I'm here to talk about the report, acknowledge or even object some of the things that they said about it, and I hope you all enjoyed this video. It's going to be somewhat of a long one. I won't be going through every single point. It's going to take me a really long time. Just going through some of the major ones, okay? So, Grizzly Research, they are a short seller company. And so what they do is they do research on companies and then they offer some of their opinions on it. And what they have just written today was kind of crazy in a way. So they say that well health technology is a toxic rollout. Okay, toxic company, that's really strong in a way, okay? So saying this company is just poison in itself, okay? Now let's continue on. Well, the company has increased about 500% in the 10 months on the back of multiple digital first accusation companies. That's true. Yeah, so since a year ago, around the pandemic times, it was quite low. I think it was about in the dollar area. Yeah, during like the pandemic times, in the beginning of it. And yes, it has skyrocketed about 500%. Now, what they have done is that, yes, they have bought a lot of accusation companies. They have acquired a lot of different companies that are in the medical field. And they say management is enjoying this ride. Well, I'm pretty sure a lot of shareholders are enjoying this ride. But we're concerned retail investors will be holding the bag as digital progress is overstated and accusations have been at best overpaid for. Very important. They say that this digital growth is kind of overhyped in a way, and it's not going to be slow, it's not going to be growing as much anymore. Well, first off, I think it's just the beginning. All right, digital business is just the beginning, and it's going to be continue to thrive the next 5 to 10 years. Okay, it's not going to slowly go down in a way. As we go back to normal, it's called the new normal lifestyle. A lot of people will still be seeing their doctors, right? In clinics, right? In person or virtually, Virtually, it offers you such a great convenience in a way. And what wealth does is that they have a mixture of both. They're not so reliant on one. That's what's so great about their business model. And you know what? Even though they are digital first, right? This, like I said, this industry is going to be continue to grow year over year. There's no doubt, in my opinion, as there's better technology provided for telehealth and also in person. That's what it is. That's what I think. And so I think it deserves to be up 500% in this past year. Okay? And I don't think this digital progress is overhyped in a way. I think it's fairly judged correctly. And they say that the accusation deals have been overpaid for. And I'm gonna go to that section next. But we are gonna talk more about it in the later on stages. So it says CEO Hamid Shabazi didn't talk about his divestiture into a Silicon Valley buyer, and they say that it's because of some material data breaches at the company that he didn't talk about it. He didn't disclose about it. That's something I couldn't find. You know what? This could be right. If some investors out there, if you know some information, please let me know in the comment section below. If this, if you can find more information. As of now, this is still quite a rumor about it, okay? If it is true, then yes, I would be disappointed in the company, and especially the CEO not talking about it. But there hasn't been anything about it yet. Next one, let's talk about Well's largest ever accusation. CRH Medical, which they just fully finalized. It's highly problematic, showing that Well's hype train is over. Red flags indicate a high likely of conflict interest and failure to do their research. CRH appears to be a toxic deal that Well grossly overpaid for. Some really strong words. Okay, it's problematic. It shows that Well didn't do enough research on buying this company. It showed that this is a toxic deal for the company, and Well paid super highly for. Okay, now I'm here to talk about this deal. Okay, the accusation of CRH Medical. What they do is that they are a provider of anesthesia to right here, as the leading provider of anesthesia services to the gastrointestinal community. So it's basically more for your stomach in a way, alright? Any stomach diseases and all. What this deal actually did for them was it helped the company with a bigger expansion into the US market, alright? And see, it unlocks a new revenue and business opportunities for them. So, Well, as you know, they are expanding in Canada, but also besides Canada, they are expanding deeply into America market as well. So this company, what I'm looking at the facts, okay? CRH reported in its last quarter in 2020 with about 37 million in quarterly revenue, about 21% year-over-year growth. Great. And this helped Well with the free cash flow and as well as future reinvestments and as well as great revenue generator. They bought this for about 286 million in shares and also 372 million. So in total, they approximately paid about, let me see if I can find it. Is this $6 million? Oh, 600 something million dollars? Let me see if I can find it. I'm so sorry, but anyways, they paid a pretty good price for it, okay? And I can show you an example of how, okay? So if you take about 600 something million and you divide it by just their quarterly revenue last year, you get about, maybe I can show it to you right here. Does it show on the screen? It doesn't. But anyways, you take about 600 something million, you divide it by 37 million, okay? And you get a PE ratio of about, no, price to sales ratio of about 20 something, which is not too bad, which is fairly priced. But I didn't even account for their full year revenue. If I did, that would mean the price to sales ratio is even lower. That means they paid a better price for it. And to say that they overly paid for it is kind of surprising. So are they expecting a much cheaper deal that they want to be that they are going to steal the company? I don't think business people are smart, all right? That's what it is. I don't think you can really outsmart others that much, okay? So in my opinion, it's such a great deal for them, even at this price, okay? At a price to sales ratio about 20 something. And that's only counting in for last quarter's revenue. I didn't count for the full year. Okay, next one. It appears that Well has, removed some crucial information on many recent accusation deals, saying especially for CRH. Well, what we're given is what we're given, right? So if you are able to give out, further information that are true, I hope you can release about it, Grizzly. Research, okay? You know what? Looking at these reports, you don't want to be super one-sided in a way. You want to be more objective, because that's the mistake. You don't want to be one-sided, because if you are, you're totally neglecting what the others are saying, which is wrong. Next one. Well paid 300% premium for Advocare, a company emerging from bankruptcy with a history of cooked financials. Well, if they were, a company that was from bankruptcy and they didn't have good financials, let's take a look at the most recent performance, okay? What have you done for me lately? That phenomenon. They paid about $4.75 million, and it's estimated that their annual revenue is going to be close to about 2 million, okay? It could be less, could be more, but estimate it. Let's go through with that, of the estimation. Grizzly saying that this revenue is going to be much lower than 2 million, probably like a million or even less. You know what? It depends on who you trust, right? AdriCare is an existing electric medical record and telehealth software revenue company. So with this, Grizzly is saying that, you should have just paid about $1.4 million, okay? And if you calculate that, okay, that's ridiculous, because Well paid 4.75, you divide it by an estimated of this is estimated forward revenue of 2 million. That means you're only really paying about 2.3 price to sales ratio. That means every $1 revenue this company earns, you're only paying $2.3, okay? That's a steal in itself. To say you should be paying about 1 million, that's what it is, right? About a million. It's it's funny. That means you're gonna earn more revenue than how much your company is actually worth as a whole. That almost never ever happens, okay? That's that's basically saying that I can't believe it. That is a steal. That's stealing the company. Really stealing the company, meaning you got an awesome deal out of it. And Well still got a great deal out of it, in my opinion. You know what? They said that you should have stole this company for this price, all right? And maybe it's saying that Well's negotiation wasn't good enough. But in my opinion, it was worth it. Okay. Well purchased a proclaimed telehealth company called Circle Medical. We believe this is not true. That's why Circle shareholders cashed out with Well deal. Okay, if I look at Circle Medical, okay, this company, it's saying they aren't a telehealth company. Okay, well, let's take a look at the services and all. I mean, from all these services, it seems like it is. I mean, maybe it's not as digital as it is, but as long as they're able to provide like great in-person clinic as well as a combination, that's fine, right? Does it have to be a pure digital, right? No, it doesn't. So I don't really quite understand this part. So they also say Well overpaid about 200% premium for its investment in Insignia. I didn't read too much about that, but you guys can. And could be true, but if you do the math itself, it's for you to determine, right? Maybe in their eyes, it's a premium, right? In our eyes, it's different. That's why you can't truly say like, that's why all these are so subjective. That's what it is, right? Everyone is entitled to their own opinion, and you have to respect it. That's what it is in different reports. Okay, and they also say they have overpaid for Source 44. The quarter 2020 results indicate it may have vastly overstated its future performance. We reveal signs of a dormant business and terrible infrastructures, all signs of just a subpar company. Okay, well, that's for I don't have much to say for that. I didn't completely do my research on that, but from the patterns that I have revealed so far, it doesn't seem like it. Okay, and we also have Well using some accounting tactics to really hide away their EBITDA profitability. Well, they're following the rules, right? That's what it is. And you know what? If it was hiding it, then maybe someday it will be revealed. But so far, it's been good. It's so far accepted. Well, and this is the big part. Well is not a digital-first telehealth business. That is an attack on their business model in itself. Well is not a digital-first telehealth business. What is Well all about? It's about providing digital care to others, okay? And that's what their business is all about. If you just go on their website and know. And it is true. That's what they're all, you just read through it. You can even get their business as well. You can even be a customer of their business, All right, look at that. You can just read through it. If you don't believe it, see if you can sign up for it. You can, and I could sign up for it if I want, but I don't need it at the moment, so I'm not signing up for it. But they are one, okay? With so many customer reviews and all, unless all those customers are scams, right? I'm willing to believe that this business model is 100% true, and that's what is mainly all about. Okay, they use the inflated price to move over to CRH Medical, a completely non-digital business that trades off EBITDA with no chance of ever being digital. You know, when they complete their accusation deals, it's not purely all digital business. It doesn't have to be, in a way. CRH Medical, it can help them expand into other areas of medical fields, okay? And as long as the company is generating revenue and all, and is at a healthy part, does it really matter if it's actually like digital or not? As long as it promotes growth in your company and all, and helps customers, does it matter? Okay, is well inflated. We'll get that. Is the stock price currently inflated? We'll get to that calculation in a few moments. We see 60% downside under the optimistic assumptions. 60% from today's current price is about less than $3.50. Okay, so about $3 area. And let me tell you this. Let's use their forecast earnings and all, okay? I want to be able to show to you guys how much faith I have in this company and whether I feel this current stock price is, it's fair value, okay? So taking a look at their market capitalization, okay? 1.15 billion, okay? You divide it by 50. Divide 50, okay? That's how much revenue they earned as of last year, okay? That's about 22 price to sales ratio. That's fairly valued, Some telehealth companies trade even higher and with bigger growth, right? They trade at 30, 40, even to 100 sometimes. So this is fairly nice, okay? This could be lower than the industry average, which just means you're getting actually good value out of it. Now let's take a look at the analysts, okay? What does analysts have to say? Analysts say this year, they forecast 210 million, okay? $210 million, about 318% growth in revenue. That's massive. Let's say they're able to reach that, okay? If they are able to reach that, they are actually going to be earning where is that? Okay, they're going to be earning a price to sales ratio of 5.5 or 5.3 if their current market valuation is the same. That's crazy, isn't it? That's absolutely crazy. If the price just stays the same, which I'm willing to bet it's not going to be this market share at the end of this year, okay? If they're able to earn about 210 million, this isn't going to be a $7 company at the end of the year. This is going to become, I can dare say, a 1.5 to even a $2 billion market cap, which makes this about $10 to $14. All right. So this is kind of my defense on well. When you invest into a company, you want to be able to understand it well and be able to defend it against anything that you see, and also acknowledge some of its weaknesses as well. All right. So that's what I'm here to talk about today, and I hope you learned a lot of things. Like when you invest in companies, sometimes you don't even know what you're investing in, and you can't really make supporting ideas for it. And once you reach that level where you're able to make supporting ideas and defend your company, that's when your investment value and your knowledge has really evolved. And that's where I see myself evolving. If you have troubles trying to really figure out how to analyze companies and all, and you're getting lost, you just started in the stock market, let me help you out. So what I'm here to do today is I'm actually going to promote to you all my finance class. Okay, I recently just released it. It just debuted about a week or two ago. And what I'm going to help you do is try to help you understand finance, especially stock investment. What I teach you is that I'm going to help you understand better about market analysis, short and long-term trading strategies, understanding statistics and numbers, right? And best of all, the first class is for free. You just have to invest 1 hour of your time, and you have to, and then that tells you that whether I'm a good teacher or a mentor for you. And you know what? In the end, I hope to be able to make sure you guys can build a low risk but high reward portfolio. Who doesn't want to build that? And I think I know what it takes to build it. And only a matter of time will really prove whether I'm right or wrong, And so here's all my contact details. You can search me up and all. You can leave a comment section below. But other than that, I'm fairly happy with my defense for this company. And a lot of people in this conversation have defended it really well. Like, they just totally neglect about it and all, and calling it a joke and all. I'm much more objective. I want to really look at it from their perspective and see if they have a logical reasoning for what they say. And so thank you all for learning with me and learning about this incident. And if you are interested, make sure to sign up and contact me. I am always open-minded and willing to teach anybody, no matter what skill level you are. So thank you very much today. I hope you all have a beautiful weekend, and you know what? See y'all next time.